Remember a few weeks ago when we asked if Palantir was the ultimate AI stock? Some of you responded with cautious optimism, intrigued but not entirely convinced. Now that Palantir's Q2 2023 results have rolled out, it's time we revisit the enigma that is Palantir. Are we looking at a misunderstood tech genius on the brink of an AI breakthrough, or is the hype outpacing the reality? In the next few minutes, we're going to dive into Palantir's recent performance and what the experts are saying. So, strap in as we try to uncover the truth behind Palantir. For those not in the loop, Palantir Technologies is a public American software company that specializes in big data analytics. Since its foundation in 2003, Palantir has been involved in some of the most critical government and commercial data projects around the globe. Palantir's operations revolve around two primary segments: Palantir Gotham, primarily for government clientele, and Palantir Foundry, targeting commercial clients. The company has been growing steadily, and despite some criticisms and controversies, it continues to carve out a substantial niche in the market. For Q2 2023, Palantir announced revenues that slightly outperformed analysts' estimates, while earnings met expectations. But that's not the end of the good news. The company has also upped its revenue guidance for the full year to exceed $2.21 billion. A minor but still an upward revision from the earlier $2.19 billion. Palantir has also posted GAAP profitability for the third consecutive quarter. Things are getting exciting because once Palantir posts a profit for 4 quarters in a row, it will become eligible for inclusion in the S&P 500. And to top it all off, Palantir threw a curveball by announcing a $1 billion stock buyback program. Now, this bold and unexpected move signifies confidence in the firm's prospects and ability to continue generating cash, and shows commitment to delivering shareholder value. So, we have increasing revenues, a raised guidance, sustained profitability, and a sizable buyback program. Quite a mixed bag of treats for us to delve into. Is this the start of a new chapter for Palantir? Or just another blip in the hype cycle? Let's dig deeper and find out. First off, in a letter to shareholders, Palantir's CEO, Alex Karp, mentioned that the scale of the opportunity that lies ahead for the company has never been more significant, emphasizing the new artificial intelligence platform, AIP for short, launched just 3 months ago in April. The AIP allows large language models to operate within an organization's enterprise using privately held data. Interestingly, over 100 organizations worldwide are now using this platform, including giants from healthcare, finance, automotive, and energy sectors. It's clear that AI technology's integration into enterprise systems takes a lot of work. There are significant technical and governance challenges. However, Palantir seems to have created an AI platform that addresses these hurdles and includes an assistant that helps enterprises make operational decisions. As a result, there's an overwhelming demand for AIP, with the company in talks with over 300 additional enterprises, keen to leverage its capabilities. As the CEO puts it, this phenomenal traction has been transformative for Palantir only months after its release. Shifting gears to their financials, Palantir recorded total revenue of $533.3 million in the second quarter, a 13% year-over-year increase. This was slightly higher than the $532.7 million expected by the analyst community. Its top 20 customers have also been spending more on Palantir's services than a year ago. This is a testament to Palantir's ability to add lots of value to its customers, and can be seen by the average trailing 12-month revenue per customer, which increased by 15% year-over-year to $53 million. In the second quarter, Palantir's revenue breakdown reveals that commercial revenue grew 10% year-over-year to $232 million. Government revenue, on the other hand, grew 15% year-over-year to $302 million. If you look further into revenue breakdown, U.S. commercial revenue impressively surged by 20% year-over-year. Yet, according to CFO David Glazer, when setting aside the effects of strategic investments in SPAC, this growth spikes to an astonishing 37% for Q2 2023 compared to the previous year. As for the government sector, international revenue soared by 31% year-over-year. However, U.S. government revenue had a more modest increase of 10% from the same period last year. Additionally, their customer count grew by 38% year-over-year and 8% quarter-over-quarter. In the U.S. commercial sector alone, the customer count rose from 119 in Q2 2022 to 161 in Q2 2023, a significant 35% year-over-year increase. Billings also grew substantially from over a year ago to $603 million, representing a 52% jump. Examining margins, Palantir has been increasing revenues while consistently delivering gross margins higher than 80% over the last 5 quarters. As they continue to grow revenues and control expenses, such robust gross margins are poised to boost their bottom line significantly. Palantir also posted another consecutive quarter of profitability, their third in a row, signaling a trajectory of sustained earnings. In fact, they generated $28 million in net income and posted an operating profit for the second quarter in a row, with GAAP income from operations growing to $10 million. Palantir is projecting to stay profitable on both quarterly and annual scales, which, if achieved, will confirm their eligibility for inclusion in the S&P 500 after their Q3 2023 results are released. This potential inclusion into the S&P 500 could act as a catalyst for the stock. Here's why. Upon joining the index, a slew of passive funds tracking the S&P 500 will be compelled to purchase Palantir shares for alignment. This can generate a surge in buying demand, likely providing upward pressure on the stock price. Historically, companies newly incorporated into major indices often experience a temporary boost in share price as index tracking funds rebalance their portfolios. However, it's crucial to remember that other market dynamics and company-specific news can also influence the stock's movement. Still, the potential influx of automatic buying from passive funds could be a favorable tailwind for Palantir investors. As of June 30th of 2023, Palantir held $3.1 billion in cash and cash equivalents. Such hefty reserves offer a sturdy financial cushion to capitalize on the expanding market opportunities ahead. More so, their cash from operations hit $90 million, marking the 10th quarter in a row of positive cash flow. For Q3 2023, Palantir expects revenues to be between $553 to $557 million, with adjusted income from operations in the range of $135 to $139 million. And they're raising the revenue guidance for the full year to in excess of $2.212 billion, while also raising their forecast for adjusted income from operations to over $576 million. But the proof, as always, will be in the pudding. The company's ability to fulfill these commitments and meet the high expectations set by its CEO and retail investors will be key to whether it secures the title of the ultimate AI stock. The controversy surrounding Palantir's AI capabilities leads to split opinions among market analysts. Some, like Rishi Jaluria from RBC Capital Markets, are skeptical about Palantir's AI prowess and warn that the hype leads to an overvaluation of the stock. In the eyes of Jaluria, Palantir is not a generative AI company. So, his firm's price target is $5, implying a severe drop from where it currently trades. On the other hand, some analysts like Dan Ives of Wedbush Securities are bullish on Palantir's growth prospects. Ives even dubbed the company as probably the best pure-play AI name and the gold standard in AI. Wedbush maintained its outperform rating on Palantir and its $25 price target. So, where does all this leave Palantir? Despite skepticism, the company's growth and expanding clientele are undeniable, but questions about its AI capabilities and the potential overvaluation of its stock present significant challenges. Palantir's stock tanked by a little over 5% the day after it reported its Q2 earnings. As long-term investors, we viewed this sharp drop as an opportunity to buy the dip, and we capitalize on it. But it does not mean that Palantir stock is a suitable investment for you. We highly encourage you to conduct your due diligence and consult with an investment advisor to determine the type of investment that best suits your investment profile. Ultimately, whether you view Palantir as a leading player in the AI space or as a company that has overhyped its AI prowess, there's no denying that it's a company that will continue to be a major topic of discussion in the tech world. What do you think about Palantir's AI claims and its future prospects? Do share your thoughts in the comment section below. Remember to like this video, share it with your fellow investors, and subscribe to our channel for more insights into the tech world. Stay tuned, and until next time, let the power of knowledge fuel your financial journey.